Hello, welcome to another video by Indicator Vault. This is Ronald, and in this video I'm just going to use the order block gen indicator and kind of go over just some price action concepts as far as strong order blocks to trade from, or strong highs, strong lows, and maybe how to interpret which order blocks might be the highest probability ones to trade from, and which ones will actually cause price to make a new high or a new low. So I'm going to start out by just pointing to this price action here, and the main thing you want to look for is, for instance, in this bullish order block, this high is what pushed price to this low, right? It created a new low. And then we see here, this high then got broken. With this candle here, some, traders may want to count the wicks as, yes, it does break above it. I personally like to look for candle closes above the most recent high, in this example, bullish example, to count as a break of structure or, a valid, strong low to hold. So the high that caused this low now got broken. And then we see price even continued and went above this high as well. So in my mind of how I interpret that is that this order block should hold, that this zone should cause another push up in price. Now, we don't quite get that touch here, and we get it here, but it has now been broken. See? So when that is broken, I now interpret that as whatever zone caused this to break is now in control, which would have been this one. But now we see this one has been broken. So now we view this as in control. And if price comes down here, we could see another push up. So hopefully that's not too confusing. And, sometimes that's just how we need to filter out, which zone, which order block is actually in control and moving price. And did this bullish order block break above a bearish one? And so, yes, it did. And so we can expect some more up movement, in which we do see that it didn't quite reach back down to here, but we do see the up movement. Now, we can see I've got this line here, and I want to zoom in because we can see I'm on the 4-hour chart here with the British pound, and we're going to go into some lower time frames with that same logic and see how we could have caught some of this. So we see this bearish order block is spotted by the order block gen. So we can see here this low that caused the high was broken, right? Broken here. And we see the retracement back up. So as this 4-hour bearish order block has been validated, we see the break and then it immediately retraces. And of course, we may see some touches here as well. But this is why I highly encourage lower time frames and going into, refining your trades, refining your entries. So let's do that now. All right, so here we are on the 5-minute. I know I jumped a few time frames, but this is how you want to refine your trades with, this sort of logic. So this is where the 4-hour bearish order block had started. If you remember, that's where I put the yellow line. So we just look for that same pattern. And so we see it here, and the main confluence is that this is happening right, at the line, right, inside of that 4-hour bearish order block. We see the break happened here at this, see the 405 mark right there. This is where the break happened on the 4-hour chart, validating this as the 4-hour bearish order block. We see it retrace. But this is how we filter out. It does break this low, but this is not the low that caused the high. This is the low that ran up this high. So we don't see that broken yet. Yes, it does hold, but we're looking for our, criteria to line up. Retraces, and then what do we see? Now we see the break of structure. This low that caused this high has now been broken. So we are now looking at this order block to hold. And it doesn't quite hold, except that it never closes above it. You see just this one wick right above it. And of course, with experience and, just basically learning price, you want to give yourself some wiggle room, especially with these two highs close together. It can very easily wick you out. And even with spreads alone in Forex, you want to give some wiggle room. You see it took out this high and that high. So you want to probably put your stop loss above the next high, just because they are so close together. And when you look at the 4-hour chart, again, we're framing this off of the higher time frame. But the logic still stands on all time frames. This caused a break of structure. On the 5-minute, we also have the 4-hour break of structure. So we are still expecting bearishness. We're expecting a strong down move. And then when we go back out to the 4-hour, remember, if this is our stop loss, we got in right around here. Well, we're looking for a new lower low. And so just good risk management of not having the super tight stop. 26 pips is plenty to look for this low right around 7-1 R&R. That's an incredible trade. And of course, if we play it out some more, dips down even lower. Just taking out that low, you're still looking at close to a 10R trade. So you would have had to have been watching the charts pretty close on this one, but using that same logic just from the 2 time frames would have given you an incredible trade here. Now, here we are. Actually, let me show you. We're on the Euro Australian dollar 4-hour chart, and just another quick example here using that same logic. So this order block, this bearish order block, broke this bullish one. So now we are expecting this one to show some strength down. See, I've marked the low of the bearish order block here. And let's go into a smaller time frame and I'll show you where these lines come in. This is going to be the exact same process as we just saw on the British pound chart. All right. So here in this yellow line here marks the 4-hour order block. It is broken here and validated. So we look inside here. This price action isn't necessarily the cleanest. However, it still does its job. This low that caused this high has been broken right here. And this is inside the higher time frame 4-hour order block, right? And then the order block gen marks out this bearish order block. So we do have some other price action here. However, the confluence of this one inside of the 4-hour order block that caused a break of structure here. It broke the low. We have our eye on this zone. So I've got to play it out with the replay tool. Just remember, this is the low of it. This is the high of it. And the precision is pretty much perfect on this example here. Price just kind of plays around. And sure, there are some other trades in here because we are bearish and we see some strong moves down. There's other trades in here to take. We can see this bearish order block did hold, pushed price down some more. So I'm just pointing out, the concept, the theory of the break of structure paired with the order blocks here. So finally, we see some retracement. And we're right there. And then it just completely tanks. Perfect touch to the bottom of the order block. You could have entered right there. Again, put your spread, in just some wiggle room for wicks and such above here. Do something like that. I mean, we can see, it's so quick for how heavy it is. And if you just wanted to hold for just the 5-minute low right there. That's already almost a 6R, 5.74. So just some simple price action concepts with just one indicator here, the order block gen, and some great trades alone that can be made just on these two pairs, the Euro Australian dollar and the British pound US dollar. So I hope this video was helpful, and until next time, best of luck trading.